Right now, the entire crypto space looks horrific. You have red charts everywhere, sentiments in the absolute gutter, and pretty much everyone's talking about anything but crypto at the moment. They're talking about silver, they're talking about gold, they're talking about AI and Cloudbot and all kinds of crazy stuff. But it's moments like this when people often misread exactly what's happening. Every single time that crypto's in its optimal zone to buy is usually the moment most people don't want to buy it. They usually they want to buy it when it's an all-time highs. They don't want to buy it when, sentiment's in the gutter. And right now, when you zoom out and you look at the big picture, this sell-off doesn't look like it's the end for Bitcoin and crypto, etc. It looks like something very, very different. So let's take a step back and look at the bigger picture of what's actually happening. Right now, you have underlying liquidity conditions improving and a lot of positive catalysts on the horizon, especially for crypto, but you also have everyone scared out of their minds. You have a lot of uncertainty in the market. So you have two opposite things happening at once. You have people, out in the market buying different growth, again, like I mentioned, certain stocks in AI, and you have people buying protection like gold, and then gold beta plays like silver, copper, etc. And this is kind of an odd setup because normally the market has like one mood, right? You have like a happy mood where like stocks and crypto and everything's ripping, or you have a sad mood where, everything's down and, maybe people are buying protection in terms of like bonds and gold, etc. But right now the market has basically a split personality. You have, again, certain sectors of the market really doing well. But then you have like gold skyrocketing, but at the same time you got like, bonds not long-term bonds not doing well. So it's kind of like this weird concoction mixture of all these things that, maybe don't really fit together or don't at least traditionally fit together. And right now, gold going up is basically people's lack of trust in the system. It's people's lack of trust in the bond market. It's people's lack of trust in fiat currencies. It's people's lack of trust in governments and politics and, global conflicts, etc. There's just a lot of uncertainty in the world, and that's an environment that typically gold thrives in. In a world full of uncertainty and just people not knowing how things are going to play out, especially with AI and just all this craziness, they want something tangible. They want something that they can, like, physical. They want something real. And for them, that's gold. And so you have a lot of people buying gold. And when gold goes up, you typically have kind of like this, chain reaction of events where it's like, oh, gold went up. What's the silver to gold's gold? That's silver. And so you have other, people buying silver and they're buying copper and they're like, look, it's metals going up. That's the narrative around it. So, metals skyrocketing. And now kind of playing into this is the Fed and, the war going on at the Fed. Okay. Trump wants the Fed to cut. And the Fed doesn't want to cut. They said, hey, we're not gonna do that. We're scared of tariffs. Trump's like, hey, tariffs have led to literally no inflation. Like the inflation's fine. Why are you not cutting? We need this. And, you got this back and forth. And Trump's kind of using every lever he can to try to go after the Fed. He's like, hey, can I throw these guys out of office? Can I fire these guys? Like, what can I do? Because I don't like the job these guys are doing. I want to put other people in here who are going to do the right job that I think they should be doing. And this leads to kind of like this issue in the confidence of the Fed, because there's sort of this illusion. It's kind of a stupid illusion, to be honest, because it's not real, of Fed independence, okay? The Fed is this independent, pristine organization that just does what's right. And, maybe in some cases, I actually kind of think Jerome Powell, in some ways, does kind of represent that. Like, he kind of just does what he thinks is right, even though, historically, what he thinks is right isn't always right. And he's been wrong on quite a few things, but even still, that, there's kind of this illusion that the Fed's independent, okay? Again, not true. When the president comes in and, historically, he's like, hey, we need some help. The Fed typically just kind of does what they're supposed to do. So, I don't know. I don't think this Fed's this pristine, independent organization. I think that's stupid. But, the markets aren't even reacting to that. They're more reacting to the fact that they think everyone else is going to think that way. The point is, they're worried. They're worried that, if Trump comes in here with the hammer and kind of breaks up the Fed, that, you're going to have this huge loss of confidence in, the government, the dollar, bonds, whatever. And it's going to cause this kind of like economic uncertainty. And so because of that, that's one of the other things accelerating this move into gold and metals, etc. And that's not the only thing it's accelerating. It's accelerating a massive decline in dollar strength. And just to pause here for a second, if you've watched some of my content in the past, dollar strength going down is insanely bullish for risk on assets. When dollar strength drops, this is really good for liquidity. For example, look right here. This was September 2025. And you saw dollar strength from September 2025 went up till about November 2025. And if you remember what happened between September and November of 2025, it was the most brutal crypto market action ever, okay? It was horrific for Bitcoin and crypto, et cetera. And that coincided with a massive move in dollar strength going up. Okay, so that's not good. That's bearish for liquidity and risk on. But bullish is dollar strength going down, and it just fell off an absolute cliff. A little bit because of this, a little bit because of what's going on with Japan and talks of a bailout and all kinds of stuff. But net, what's really good about this is actually really good for risk on assets. This is actually a bullish thing. And even just kind of zooming out historically, you can see right here in 2017 during the bull market, dollar strength fell off a cliff. You can see right here, right before the 2021 bull market, dollar strength fell off a cliff. Dollar strength going down is a good thing. And so, this move, this might not seem like much to you, but this is dollar strength falling off a cliff. This is actually a pretty insane short-term move in dollar strength. And obviously, I'm not the only one that's noticed that dollar strength has fallen off a cliff. You got bar chart talking about it. You've got the Kobesi letter talking about it, where they say breaking the US dollar index extends losses to minus 1.5% this month, now at its lowest level since September 18th. After posting its worst year since 2017, the dollar is off to another bad start. This marks the market's message is consistent: own assets or be left behind. And he's saying that because it's typically when dollar strength drops, asset prices go up, which is exactly what I've been saying. Now, some of the other big things throwing uncertainty into the waters, especially when it comes to crypto, are a couple different things. One, tariffs are back. The other massive component of what's causing this sell-off is the risk of another government shutdown. Now, this was a risk that I talked about like a month ago. The odds didn't look high. It was sitting at like 27% chance, 30% chance. We were looking good until all of a sudden, like a couple days ago, the odds shot up from 9% all the way to a 70 or 80%, right now 79% chance. That is not good. We do not want to see another government shutdown. If you guys remember, last time we had a government shutdown, it was record breaking. It was like the longest government shutdown in history. And it was really, really bad for liquidity. Why is it really bad for liquidity? Because the governments pay people. Governments spend money. That is liquidity going into the economy. And when that liquidity stops going into the economy, when the government shuts down and that stops going in, you have a huge liquidity retraction. Now, the last government shutdown had a couple things going for it that just made it especially horrific. One, it was the longest government shutdown in history. So massive, pause period. Two, it was right after this massive TGA rebuild. So we had this crazy TGA rebuild. That was already a liquidity retraction event. And then that bled over into this government shutdown, which just made it worse. You had the step up in issuance in there. You had all these things going on that made it just extra horrific. So the good news is this time we have great liquidity. Like liquidity is not horrible right now like it was in the last year. And so it's not quite as dangerous of a situation, but it still could be dangerous depending on how long it lasts. And it's still obviously not good. It causes more uncertainty. People kind of have a little bit of a fear, recency bias, because we just had a government shutdown that was really horrific. So, that fear and hit to sentiment can cause things to get worse. And so overall, that's actually not a good thing in the short term. So in order for crypto to get kind of back on its horse and get going, you need a couple things to happen. One, you either need the economy to turn, like in periods of when the economy's running hot, ISM's clicking up, things are doing good. That is when Bitcoin runs, and it runs hard. Okay. Right now it's like, Bitcoin's stuck in the middle. Okay. We got this weird kind of freaky, thing where some things are doing good. There's all this fear in the markets. You have gold and some stocks, going up. But Bitcoin doesn't like that. He either wants the market to just be like crushing it. It's just like, all kinds of froth and craziness. And, Bitcoin just eats that for lunch, right? That's when you see Bitcoin just like cruising, up to all-time highs, sometimes those parabolic run-ups, all that kind of stuff. The second thing that Bitcoin kind of weaves in and out of is like a hedge. Bitcoin sometimes acts as a hedge against government debasement. All this stuff we're talking about, all this bearish stuff we're talking about, actually is a bullish thing for Bitcoin in some time periods. And that people don't like that because they don't like it to act that way sometimes and not act that way other times. But Bitcoin's a little bit more complex than that. One of the things right now that's limiting Bitcoin's ability to act as like a hedge is a couple different things. For one, it was already in this decline due to liquidity. Bitcoin loves liquidity, and when you take it away, Bitcoin hates that. It was already in a decline due to liquidity going into the end of the year, and you had that liquidation day event, et cetera. So people kind of were already a little bit fearful of Bitcoin, which didn't help it in this kind of debasement hedge. Two, you had the 4-year cycle in the mix, which even if people were like, oh yeah, we're going to buy this as a debasement hedge, you had other people selling it on the other end. So you just, price wasn't moving anywhere. And three, you just have this extended time period. Like I don't even know how many months we're going on now of Bitcoin just with negative price action. That really nukes sentiment. And it's just hard for, Bitcoin to kind of carry that momentum, right? Right now with metals or whatever, I could be talking about metals and be like, oh my gosh, did you guys know there's one metal that hasn't gone up? And, that could be my YouTube title or whatever. And everyone would be like, oh my gosh, what's the metal? And they want to buy it. Why do they want to buy it? Because metals are going up right now. There's like a positive sentiment around metals. You just like, they're at all-time highs. I want to buy anything. I want to talk about it. I want to buy anything. I want to watch videos about it. Whatever. That's how people act. They don't want to talk about and think about and do things with stuff that isn't doing good. That's just how people work. That's how their brains work. But this is also what happens at the end of every single, crypto bear market, okay? Sentiment's in the gutter. Every bad news event causes it to crash further. Then you have like an FTX level crash, which, you could call that our October 10th crash or whatever. And then but price just takes time, but it eventually rebuilds, okay? Sentiment rebuilds, it consolidates, and then it, slowly goes up from there. As this tweet points out, feeling pretty stupid holding Bitcoin right now. Probably a good time to buy Bitcoin. And that's so true. Like at the times when you feel stupidest holding it, stupidest buying it, usually that's like the best time to buy. Usually that's the best time to get in. It's usually not the best time to get in when everything's at all-time highs and everyone's wanting to get in. And I also want to highlight something I highlighted a couple of videos ago. And that's said well here in this post by Jail. I never want to hear anybody talk about Bitcoin having too big a market cap for steep moves like this. You're looking at the chart with a $35 trillion market cap, basically highlighting that if Bitcoin with a $35 trillion or if gold with $35 trillion market cap can move up like this, then Bitcoin with a couple $1 trillion market cap can definitely move up like this. And with silver, Bitcoin used to be bigger than silver. And it says right here, in just 1 month, silver added more market cap than Bitcoin has in total. Silver went from 3.9 trillion at the end of December to 5.8 trillion today, a 1.9 trillion move. Bitcoin's entire market cap is 1.8 trillion. If the scale of repricing is possible in legacy, particularly industrial metal, it's certainly possible in a smaller, fully monetary, globally liquid asset. Bullish on Bitcoin. And that kind of gets to the heart of kind of what I'm drilling at, is that these moves in metals are foreshadowing of what Bitcoin could do next, especially going into the end of 2026. And I've seen a lot of posts about gold and silver being correlated with Bitcoin. And I was really curious about this. So I went and I did some research to see if that's true or not. And what I found was that gold and silver are not correlated with Bitcoin in the sense that, when Bitcoin moves, that doesn't necessarily mean anything will happen with gold or silver. When gold or silver move, that doesn't necessarily mean anything will happen with Bitcoin. They're not like connected in any way, in the same way that like if Nvidia moves, there's a bunch of companies that are likely to move following that. Or in the same way that like when Bitcoin moves, typically you see like Ethereum, Solana, etc. move. Those things are correlated. Or when you see gold move, typically you see silver, and maybe other metals move. Those things are correlated. Bitcoin and gold are not correlated in that same way. But there is a real lead lag effect. So even though they're not correlated, there is a real lead lag effect. And it typically goes like this. Almost always, gold and silver move before Bitcoin ends up moving. And that's because typically when you have macro stress hit, money goes where it feels safe. And that's typically places like gold and silver, etc. So gold and silver do act as sort of a signal or a precursor or a foreshadowing of what Bitcoin might do next, but only in the right conditions. Not always, only in the right conditions. But if that's true, in this circumstance, if that's true, then that means the move ahead for Bitcoin is going to be absolutely unhinged. And like I said, typically when you have a macro scarce, uncertainty, those are the kind of environments where gold and silver shine. But if that rolls over into, and this is kind of the key circumstance where Bitcoin shines, if that rolls over into a hot economy, if that rolls into abundant liquidity, that is when Bitcoin earns its reputation. That is where Bitcoin catches fire and typically does multiples of the moves that gold and silver did previously. And I like how this tweet lays it out, where it says, the most bullish things for Bitcoin happened in the last year. 2 popular myths were shattered. The 4-year cycle, the illusion is over. An omega cycle is in the cards. Bitcoin is too big to see a 10x. Gold saw almost 2x, silver 3.4x. Now we just wait patiently. As you guys know, I do believe that this year is going to be an economic kind of super cycle. I think the deck is stacked, the incentives are aligned, and I think that's where we're headed in 2026. And that is the perfect, absolute perfect ideal conditions for Bitcoin to shine. And when Bitcoin goes up, again, altcoins, Ethereum, etc., they're correlated with Bitcoin. And so, and they need like extra frothy conditions. And so Bitcoin going up, alts and everything else typically follows. And when you get extra frothy conditions, when you see the ISM peaking up above 50, etc., that's when you get an alt season and crypto goes absolutely haywire into a bull run. And I think we're going to see that in 2026. I think there's other reasons to believe that too. I should probably talk in a future video about AI and software getting just absolutely pummeled by AI and what all this means. Because I think all of this plays into the ultimate case for a insane, absolutely insane crypto bull run of the likes we've never seen. Everyone says we can't have another 2021. I disagree. I think it's very much possible that the next crypto bull run is bigger than 2021. Not that we'll have more liquidity, as I've said many times. I don't think that's in the cards. 2021's liquidity was pretty insane. But I do think crypto-specific liquidity is where we'll see things shine, where we'll see just an abundant amount of liquidity pouring into crypto from these ETFs, institutional build out, etc. I really think it is just primed. Like the entire ecosystem is primed for an insane move up. We're waiting for that spark. We're waiting for that spark to come. Bitcoin is typically the lead. Is typically the one that kind of is the forerunner. And the forerunner of Bitcoin is gold and silver. Not always. Gold and silver sometimes venture out there and Bitcoin does nothing. But if it's followed by an economic supercycle, if it's followed by the ISM peaking above that 50 mark, that is when Bitcoin shines, and that's exactly where I think we're heading for 2026. I'm still all in. I still haven't sold. I might be crazy. I might be stupid, but I'm either about to be crazy and poor, or I'm about to be crazy and just living the life, okay? So we're going to see. We're going to see how this plays out. And if you're curious about seeing my entire portfolio, or you want to see every time I buy and sell various tokens, as well as different weekly video market updates, currently the Obsidian Council is closed to new members, but you can sign up for the waitlist in the description of this video. As always, none of this was investment advice. None of this was me telling you to do anything with your money. I'm obviously not your financial advisor, and you should always do your own research. If this video is helpful, make sure to hit that like button. If you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.